Hey, what's up, Fanbase family? Ron here for another edition, actually the May 15th edition of Fanbase Finance, the audio experience. And I'm here to bring the business and finance news for the week through today. So let's get into it. So number one, inflation hits a 4-year low amid tariff concerns. So inflation in the U.S. slowed to 2.3% in April, the lowest rate since February of 2021, edging closer to the Federal Reserve's 2% target. This marks the third consecutive month of cooling inflation. However, newly imposed tariffs by the Trump administration, including the 145 on Chinese imports and 25% on autos, steel, and aluminum, have yet to fully impact inflation data. Remember, there's a 90-day pause on a lot of that stuff with China. So economists warn that these tariffs could drive prices higher in the coming months. Let's see what happens there. Number two, Federal Reserve maintains interest rates amid stagflation fears. So on May 7th, the Federal Reserve decided to keep interest rates the same, basically the range of 4.25% to 4.5%, despite mounting pressure from President Trump to cut them. So Fed Chair Jerome Powell cited the risk of stagflation, which is a combination of inflation, slowed economic growth, and then higher unemployment, largely driven by the administration's proposed tariffs. Inflation stood at 2.4% in March, above the Fed's 2% target, while consumer sentiment plummeted 11% in April to its second lowest reading since 1952. Ouch. Number three, stock market rebounds amid trade truce. So the S&P 500 erased its 2025 losses, closing at 0.3% for the year, following a 90-day tariff truce between the U.S. and China that I mentioned. This development eased investors' fears and boosted stock, the dollar, and bond yields. Economists raised growth forecasts for both China and the United States as the trade agreement reduced tail risk and signaled a more conciliatory U.S. negotiating stance. So we'll see what happens there. Number four, Bank of America predicts potential 17% stock rally. So Bank of America anticipates a potential 17% rally in U.S. stocks over the next year, provided that a recession does not occur. Despite plunging economic sentiment so far this year, fueled by weak manufacturing data and consumer confidence surveys, B of A highlights a significant disconnect between pessimistic soft data and more resilient hard data. Hard indicators such as low jobless claims, moderating credit spreads, and rising wages suggest economic stability. So I always say that here in my market that there's three things that I look at: the unemployment rate, credit card spend, and student loans. Those are the things that sort of let me know where people sort of stand financially at a macro level. Number five, Federal Reserve officials express caution over tariffs. So the Federal Reserve Vice Chair, Philip Jefferson, indicated that while recent inflation data suggests progress towards the Fed's 2% target, future inflation remains uncertain due to, of course, tariffs, everybody's favorite word now. He noted that if these import taxes persist, they could hinder disinflation efforts and temporarily raise consumer prices. Jefferson emphasized that the lasting impact of tariffs depends on trade policy implementation, supply chain reactions, and overall economic performance. Number six, personal finance update. So debt consolidation and savings trends. So while interest rates remain high, many Americans are exploring debt consolidation to manage credit card debt more effectively. Consolidating multiple debts into a single loan with a lower interest rate can simplify payments and reduce overall interest cost. Additionally, consumers are advised to shop around for the best savings account rates, as some banks are offering competitive yields. Number seven, consumer sentiment reaches historic lows. So consumer confidence this week was reported as falling for the fifth consecutive month in April, reaching levels not seen since the onset of the pandemic. The decline was largely driven by deteriorating expectations regarding business conditions, employment prospects, and future income. And then finally, number eight, tech CEOs attend the U.S. Saudi Investment Summit. So on yesterday, actually, May 14th, a prominent luncheon in Saudi Arabia brought together key American tech CEOs, including Elon Musk and Sam Altman, alongside high-ranking Trump administration officials such as Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick. Representatives from major tech firms, financial institutions, and consumer brands, including leaders from 4 of the top 10 U.S. companies by market value, attended the event. The primary objectives were to attract investment and business opportunities from wealthy Saudi entities and to address economic challenges posed by the Trump administration's new trade policies, again, including tariffs on primary U.S. trade partners. So that's the news for the week here domestically, and some international and some personal finance. So let's get back to the conversation. Fanbase Finance.